All right, everybody. So today is April 4th, the day before NFP, which is non-farm payroll. Let's go to that real quick. Economic calendar. So tomorrow is non-farm payroll. Big, major market moving event right here. Every month, this is the first Friday of every month. April just started. And guess what? It's the first Friday tomorrow. So we're going to have non-farm payroll. You got the unemployment rate coming out, hourly wages, all the stuff that surrounds the employment status of our country right now. Then you have some Fed speakers, but really the draw is always going to be about this employment status of the country. And so we're expecting major moves to come out of this. So first of all, be careful. And second of all, usually the days leading up to non-farm payroll are actually uneventful. So I didn't expect the type of sell-off we got today to happen. I didn't expect that. That is not typically happen the day before non-farm payroll. That was crazy. And to say the least, we've been in a crazy market. So I'm at this point, nothing really surprises me at this point because it's just like they just having a ball with us. I'm talking about the market makers, the ops. They having a ball with us right now. And so yeah, here we are. Let's kind of go into what we see happening going forward. Tomorrow is NFP, like I said, so we're gonna see some real movement heading into, and I'm gonna focus on NQ real quick for a second. So NQ is QQQ for my options traders and my futures traders. As we know, this is just NQ. The Nasdaq, we have been in some serious consolidation. Like, yeah, we moving up, but it's a gradual, choppy, grinded out move up. And then to be honest, really since for my thing is in a way, really since like the end of February, about February 23rd-ish, we've been stuck. We've been stuck in a range. We actually haven't even really left this way. So we went from moving up gradually to just moving straight sideways. And we're actually technically still in that range, even with today's sell-off. But today's sell-off was crazy. And it's really evident, even if you just look at the 5-minute right now, you can see what happened today. If you missed this, I'm gonna pray for you. I'll tell y'all my experience with it in a second. But no matter what, before I ever go to a NASDAQ chart or ES chart, I typically tend to go to DXY. So let's talk DXY real quick. Let's talk DXY right quick. So for DXY, this is the dollar. Typically, you would expect them to move inversely. If the dollar is going down, usually you'll see NASDAQ push up. Same thing with SPY or ES, in other words. So here on the dollar, you guys may recall some watch lists ago where I talked about how we swept these lows and we started to push up. So once I seen the sweep on these lows, I said, everybody, the first target for us is to come to these highs. Then we delivered to those highs. And then the second target was to come to these highs and we delivered to these highs. That was from when price was down here. So we literally called this entire run up. And then now that we got there, we have to see what is price going to do next. Because the thing I want everybody to understand is price always has an objective. There is always an objective on price. So the objective of this move, first of all, the move down, the objective was to run out sell side. Sell side meaning liquidity on the downside, meaning a lot of people have stop losses under these lows. You know, it's a nice low right here. A lot of people have stop losses under it. So what they'll do is they'll drive price down, stop these people out. And then what's the next objective? So like I said, the next objective is to run out these stop losses. Then it'll be to run out these stop losses. So that's how I approach the market. I'm largely, a lot of things I do is based on liquidity and efficiencies, things of that nature. But so here we are, we make this run and we ran above these highs. Now what? Are we gonna do the same thing? Notice that we swept the lows and guess what? We just swept the highs. But what we gotta do is be very, very careful. So in the chat earlier this morning, or was it last night? Either way, I said, yo, DXY will have a big drop if we could close under this low right here. So you see this green wick? See that green wick right there? If we could close under this low, oh yeah, DXY could definitely find its way to the downside pretty hard. And then that will be, in my opinion, it should most likely be very bullish for NASDAQ as well as the S&P 500. But you've seen we came under it, meaning guess what we did? We swept these lows so far. We swept them. Let's look at it from the 4-hour perspective. You see these lows? This is a swing low right here, right? What we did, we swept it and we starting to push up. That's not a good sign for people who are bearish. That's not a good sign for bearish people. Now it could always eventually reject maybe somewhere in here and find its way back to the downside. We'll see. But the reason I chose this green wick is this is a very important wick to hold if we're bullish. Understand? So if we're bullish, it's very important that we don't close under that. And it's not about your typical market structure. I have other reasons for saying that this wick is very important. I don't even really trade break a structure, change a character type market structure. For those that don't know, that's not how I really do things. I don't care about that stuff. But yeah, so it's not even about that. But this is a very important wick. And so I see that we didn't close under it, like I was saying. So if we do start to push back to the upside, then that will be a pretty bearish sign for NASDAQ as well as S&P 500. And all the tickers that fall under that, most likely they tend to follow suit. As you know, you might be trading Apple, and Apple typically will move with the S&P 500, or Microsoft will move with the QQQ, which is the NASDAQ. So no matter what you trade, you want to make sure you keep your eye on the dollar. And especially my Forex people, y'all know that the dollar is super impactful for the tickers that y'all trade. But no matter what we apply to price action, all our technicals applies to every freaking market. Whether you're a Forex trader, an options trader, a futures trader, it does not matter. You might trade commodities, gold. I don't care what you want to trade. What we do on a technical level applies to everything. I don't trade the dollar, but I chart this thing extremely accurately. Like, I don't tap in with y'all on a daily basis like I do with my mentees, obviously, as y'all could probably understand. But for my mentees and stuff, we've been charting this up and down. From we call this bounce, we call this bounce. That's why these purple boxes are here. We charting it up and down. But guess what? I don't trade the dollar. So that just shows you that technicals applies to everything, y'all. You could take this and apply it to Tesla, and apply it to Euro USD, and apply it to the NASDAQ. It do not matter. So anywho, like I said, man, we watching this. So we're at a very critical point because we want to see, do we want to accelerate to the upside now? Or are we going to continue to the downside and finally get that closure that we was talking about? So the dollar right now is in a critical position. So let's take it back to NASDAQ. So for NASDAQ, I didn't like the highs that we left on here. So I released a video for y'all on, I think, Monday evening, where I said I wouldn't be surprised to see the NASDAQ make a move higher, just because I wanted to run out these clean highs. And what I say by clean highs comes into that liquidity concept I was talking about, right? So typically, you can see liquidity. Yeah, there's liquidity at different swing highs and lows, but also if you see relatively equal highs, something that most people would call resistance, then usually that's what we would view as liquidity. So we try to play the move to when we blow past that quote unquote resistance level. So I wanted NASDAQ to make a bit of a move higher before anything else. But the dollar was giving me signs that it was bullish. So that's something that would keep what? NASDAQ bearish, as well as the S&P 500 or ES. They look super bearish to me. They never gave me bullish signs, and that's what I was vocal about in my little video I dropped on Monday for y'all. So I was like, they're giving me mixed signs, because I know the NASDAQ in the intermediate term most likely does want to trend back to the downside. I just thought it would come up a little higher first, but it's not necessary. It's just what I would have liked to see. But that speaks to the advice I try to give, is to not trade on the inside of a range. Now, I know this is the higher time frame. We're looking at a daily range here. So yes, you could take some intraday trade, but for a swing trader, your best swing trades will come outside of this range, because this is higher time frame chop. Now, if you was looking at chop on the 5 minute, you would do what? You would stay cash. You say, hey, let me come back in the afternoon. Maybe price will open up a little bit. You got to do the same thing if your chop is existing on a higher time frame. This is literally the definition of higher time frame chop right here. All of this crap. So things don't have as much follow through as they typically would. You can't really trust anything, and it's hard to trust something if there's no real intent. Like, just think about it. What is the concept of a range? The concept of a range, people, is the fact that price has no intent on going anywhere. So you're trying to take a bullish, let's say you find an order block in here, right? You're trying to take an order block. What is the order block supposed to do? If it's bullish, it's supposed to send you bullish. If price is being held in a manipulated range, you're not gonna go bullish. So therefore, why are you even trusting that order block? Why are you even taking swing calls off of that order block if price has no intent of going anywhere? The best trades will exist outside of the range, and that may be in the form of price. It might want to run out these highs first, then come down. So that's what we call, an AMD, where we accumulation is the consolidation side of it, right? They manipulate people to the upside, that's the M, and then they distribute to the downside. So that's one way that things tend to break ranges. Another way we break ranges will be just like this, and that's also what I'm watching for on NASDAQ, by the way. Just simply leaving the range, and at a point we're going to come back into some type of an inefficiency or a order block, whatever it may be, and then we could continue back to the downside. Either way, the best trades will come from whether you're taking this high right here, this lower high, or you're taking the AMD type of entry, which would just be like a sweep entry for the most part. Whatever it is, yo, it's not on the inside. So I want y'all to please be careful. I don't care what time frame you're looking at. If you trading in chop or you notice that price is in a range, stay out of it. Because whatever you're trying to take inside the range, it's most likely a fake out. Be careful. All right, so here's what we want to see on NASDAQ. So today, you've seen we had a really hard drop. Once again, let me show you that from the 5 minute, and let me show you this from the 1 minute. It probably can't fit on my screen. That's how crazy this drop was. This was crazy, right? Really, really insane. Now, the question is, did I catch this drop? Absolutely not. I did not catch this drop, people. I caught it visually, but I ain't trade the drop. Why? Because I was on the road. I was on the freaking road. 500-point drop, like Vic said, a 500-point drop on NASDAQ is a ridiculous amount of money. A ridiculous amount of money. To put in perspective, if you trade NASDAQ minis, right? If you trade NASDAQ minis, for every point is $20. So that's just for one contract. So if it dropped 500 points, people, do the math on it. And imagine you had multiple contracts of that. Enough said. And same thing with micros. Every micro for NASDAQ is $2. So even if you're like, I can't afford minis, you could trade micros. Every point is $2. If it dropped 500 points, you could turn one contract to $1,000. One con. But that's different. Why I say I caught this is because why I say I caught this visually is because I'm looking at my phone at this point. I'm on the road, so I'm not taking the trade, nor was I by my computer. I only do futures with my laptop. And I didn't take it on options or nothing, but I told my mentees, this is my phase 2 group, there's a very classic setup that I've introduced to them that it showed itself. And basically it has to do with, some of you guys have seen me on social media talk about knowing whether the high of the day is in already or whether the low of the day is in already. And so basically that's this yellow line. We already know that the high of the day is in already. Like, so when all this stuff is going on, we already know, like, okay, this is the high of the day. So think about logically, right? If you know in your head with an 80-something% probability that the high of the day is in already, then if price retraces here intraday, so price comes up here at 12 something, is consolidating here. If you know price is not supposed to get a closure over this yellow line, it could wick, but it can't close. Wouldn't you just take puts? Like, what's your risk to reward? I mean, but if you're wrong, you risk a few points. But if you right, enough said, right? Enough said. Like, if you right, you see what type of move you can catch. That's crazy. But it just shows you how algorithmic this stuff is, because I don't know if any of my phase 2 members is in here, but I did put it in the chat. I said, yo, the setup presented itself, but I wasn't by my laptop to trade or nothing, nor did I take it. I didn't take options or nothing because I don't like trading if I'm driving. Like, what the heck? Plus, we know the expectations were low once again because non-farm payroll is tomorrow, not today. Like, what the heck? So I'm not even expecting it to play out like this. I actually thought it would just play out like softly, maybe the first part of this. I was like, all right, that's cute or whatever. I ain't tripping. Bro, when I checked my phone again and I seen price all down here, and I'm like, oh, nah, I was so mad, son. This is the absolute worst feeling of my life. Like, I couldn't, this is probably like the craziest drop I ever witnessed, bro. I ain't gonna lie, this is OD. But, and then where does price go to? So where does price go to? It went to the lowest body on the daily. So we talk about taking profits, or a good safe target is to target the lowest body on the swing low or target the highest body on the swing high. And this right here, you see, this was the lowest body on the swing low. No, I haven't taught that in here, Dre. I actually only teach that to my phase 2 members. People, once they go through phase 1, that's SMC at large, right? That what I teach phase two is actually a different algorithmic approach to the market. I don't only do SMC. SMC is my bread and butter. That's my main squeeze. But like my side chick is low key the other algorithmic concept that I teach. And it's something that I don't really share much, but the combination of both is deadly. So SMC, there's a little bit of an SMC explanation I could have given to even this price action, because this is a POI in itself in SMC. It's just that would I trust this POI had it not been for the other algo strategy? No. Because see, the POI that I would have had in here, right? Because these it will be rejecting within these wicks, right? But I wouldn't trust a bearish POI in bullish price action. We was bullish. I mean, look, and I felt like we would go higher. As I told y'all, I had the NASDAQ coming to run out these highs. I really thought we would come and at least run these highs out. So I definitely wouldn't be looking for price to reject in here strictly off of SMC. SMC would have had me still thinking bullishly, but knowing the other thing, there's an 80-something% probability we was not going to close over this yellow line today. So, you know, I hope my members took heed. I hope the phase two members seen when I wrote that, because I know they would. That is some life-changing money. So yeah, and I'll check the chat and stuff in a little bit. I just want to keep this going. So now that we finally dropped off this hard, here's the thing. I don't want price back into this inefficiency up in here. I want this to remain open. And if we come into this 1 hour inefficiency, I know it's a big red candle, right? If we come into that, we need to stay on the super lower half of it. I don't even want us coming to the halfway mark. Don't even come up here, because at that point, to me, we're gonna end up running out all these highs and we won't go bullish. In order for price to be bearish, it needs to be heavy tonight. It could consolidate here all at once. It could do whatever it want to do, but it just needs to hold. Its price can trade pretty much up to like right here-ish. This is not bad, but we don't want it coming too deep as a retracement. I know everybody think, you know, lower low, lower high, lower low. Nah. And listen, I'm only talking about probabilities. I could be wrong, just like anybody else. I only teach based off of stuff that I've seen time and time again, and the market is repetitive, and this stuff is well back tested, well understood. So based on expectations, I don't want, especially not this initial 4 hour candle. So there's currently 2.5 hours left on this green candle, because futures is open as I'm teaching this. This candle really needs to create a 4 hour inefficiency, first of all, and it needs to be preferably a red candle right here, but definitely not nothing that's trading up too high. I don't want to see that. I don't want to see that at all, actually. So I would like price to pretty much get heavy and start to leave this area even overnight and really run out these lows, not just to the lowest body like we got. Nah, I would like to see us run out these wicks, actually come to the downside for real. So that's an expectation for bearishness. That's what I expect to happen, but I'm keeping my eyes on price pretty much faking everybody out. Remember, we're still technically holding this inefficiency that we've been holding. This is the strongest BISI I've ever seen. This is the strongest bullish fair value gap that I've ever seen. Like, price not leaving it, right? So you still got to keep your eyes open to this. We're still in a range. We could absolutely still just come to what? The lowest body, like we did. See, lowest body of the swing point, and then find our way back to the upside. So you got to keep your eyes on that. And even looking at this on the daily, right? What would you want to see? You would want to see an inefficiency get created on the daily chart. So I don't want this candle coming up too high, because now you're starting to eliminate the ability for us to create a daily bearish fair value gap. Understand? So yeah, and let me see. And once again, I see comments in the chat. I'm gonna get to everything in the chat. I promise y'all. What was I saying? Though? So yeah. So we want to see bearishness. We want to see price be heavy so we lead this inefficiency, and because I don't want this to be some type of a sweep, or I don't want this to be just come to the lowest body and start to push back up. Because stay open to that. Because once again, we still got these clean highs up here. Don't ever get too happy. The thing that makes me feel that we may actually dump is really because ES looks a lot cleaner to me. Like when I describe what I like a sell-off to look like, it looks like what ES did. What ES did is picture perfect, gorgeous. Now, during my during my Monday video that I released to y'all, right? Price had looked like this, I think. I mean, it was Monday, so Monday 2 o'clock. Yeah, I mean that's the last 2 o'clock candle, right? Then yeah, then that's Sunday. So I don't even think this was here yet when I made it. That red candle wasn't even there yet. So price looked like this, and I say, if we're gonna run out these lows coming into this area, we shouldn't touch this inefficiency before getting down there. We need to just dump. And price opened up, and it did that. Cool, beautiful. Now here's the thing. I said if we're bearish, this should remain open. An understanding you have to have is that for the type of fair value gaps that I prefer to remain open, which is a thing in itself, I will hold a masterclass behind fair value gaps eventually. But for the ones I expect to remain open, you expect those to remain open until we reach an objective. Then, once an objective is reached, price is permissible to have a deeper retracement. So we just had that deep type of retracement into today's drop off. This is the picture perfect area for price to retrace to using the fibs. This is exactly where I want price to retrace to. All right, exactly where I want this to retrace to, right inside this inefficiency. Perfect. So the thing is, this inefficiency was used. And for those who don't know, by the way, if you're talking fair value gaps, we don't care if it wicks outside of it. It's not about wicks, it's about bodies. It's not about wicks, it's about bodies. And so even with this, by the way, because I wanted to say this, my fault for DXY, you see how we had used this green candle to go higher. My fault, we used this purple area to go higher. Notice that this green candle actually wicked below the purple box. So some people might say, oh man, so the fair value gap didn't work. No, it worked actually extremely well. It took us to our target. And because the bodies were still respecting this purple box, as long as the bodies are respecting it, I'm Gucci. You don't need, it's not about wicks. It's not about wicks. So don't ever get it twisted. So same thing with this. Obviously, we wicked above it. That's nothing wrong with that. We used it and we dropped off. So now ES, like I said, looks much, much cleaner to me. Yeah, ES is much, much cleaner to me. And what do I want to do? See the same thing. I would like us to make a bearish inefficiency right now, a bearish fair value gap. This was here to show you guys what we talked about on the watch list for that I released on Monday, how we're expected to stay bullish as long as we're holding the halfway mark, just about the halfway mark. I actually low-key said that price is permissible to trade down a little bit below it, but like really just kind of hold this general area, and then that will take us to the new highs, which it did. Took us to the new highs, but did we accelerate past it or not? No, right? We just swept it. We swept it and we came down pretty hard just now. Pretty hard. And we also now we're closing under these lows, but we weren't really exactly bearish yet. I actually told my group once this closed on Tuesday, I said to my mentees, I said, I don't like the daily candle closure. That was a bad sign. I didn't like the fact that we closed back inside of this range, back inside of this inefficiency like that. I ain't like that. We came under it, but we closed inside of it. Not good. And then price pushed up. Price had a nice push up. I mean, just look at the move though. Because this describes what I said. I didn't like the closure, and look what ended up happening. We had this whole move up. But look at the nature of it. And I told y'all about this before in this group. I told y'all about how you got to look at how price is moving up. It'll tell you what's a fake move versus what's a real move. Look at the difference between, this is so clear. Oh my gosh. Look at the difference between dropping off and running up versus another drop off. Just look at the difference. You could tell the real intent on the market right now. This is real smooth, nice, a bunch of fair value gaps, great. Look at this, nasty, choppy, ugly, staggering, struggling to go up. And then what happens when we have setups like this? Tap into an inefficiency, drop off hard. Great delivery. This is like gorgeous, yo. This is gorgeous. Even the way that this transpired as well. Everything about this whole setup is just beautiful. I got nothing but great words to say to this. This makes me happy. These are the things that make me happy in life these days. So with ES, same thing, man. I want price to pretty much stay heavy. I don't want too much of a deep retracement. We're really close to some liquidity targets here. I think it should be able to go get those hopefully overnight. And so I'm looking for ES to stay heavy to the downside. it didn't even come to its lowest body target. That's why I really feel like we also have more downside here. Because even for ES, it should at least come to this daily lowest body right here. At least, you know, I wouldn't necessarily be looking. If we were going to use this as an order block, the reaction would have happened and within this area pretty much. Coming down this deep, I don't look at this as an order block. It's now no longer, now this is just liquidity. Now I want us to take these lows. So for ES, I expect a little more downside. So if ES is going to be pushing down, potentially, I could be wrong like anybody else. If ES is going to be pushing down, then I expect NASDAQ to be doing the same thing and pushing down, which tells me that NASDAQ should hopefully continue to the downside. And once again, we will keep our eye on DXY to see if it wants to continue pushing to the upside like we did towards the end of the day, right? Nice strong push out of those lows for DXY. Like if DXY was bearish too, there's no reason we should be up here. So yeah, we're gonna keep our eye on them things. Now let's talk CL for a second. No, actually, it was on this tab. Let's talk CL for a second. So this also came from just an update on Tuesday. Just an update on Tuesday. I said I want this inefficiency to remain open. So this is Monday's candle. Let me zoom in. The candle right above it, which is this candle right here. This is Monday's candle. I released a video after this candle. I said, all right, I know we made a fair value gap. If we're bullish, we should not come back to this. That's why I wrote remain open ideally. And we didn't come back to it. Good. Beautiful. We're seeing all the signatures and price action we want to see for bullishness. And then this was something that I told my mentees this morning. I believe that it should be maybe this. Yeah, I was telling CL I expect to respect the nearest BISI from 4/2, which is this one, and then continue higher. And if it doesn't, then I had a different plan for it. But this is what we expected. So let's talk about that. So just think, now we're going to learn something real quick, or we're going to go through this together. Price today, let me go to it for a second. Remember, we have this as an area. We're expecting price to trade down into this and then push higher, right? That's your expectation. So you have a plan and you're getting your plan from a higher time frame. So get your plans from the higher time frame, because price will always respect the highest time frame direction. So the direction is, first of all, we're bullish. Second of all, we have something to go bullish off of. We have something to go bullish off of. I bet. Say that. So I'm looking at this at 8 something a.m. That's when I'm trading it. So this is my morning trades. So let's go through this together. 7:45. Boom. Boom. We getting closer. Cool. That's like 8:30. All right. So we're not trading this close to this inefficiency for no reason. I'm just waiting to see what price does here. Also, I want you to take a look at how we're dropping into it. Look how we're dropping into it. Not really ideal. The trading view switch or something. Why does it say select bar here? That's interesting. I never seen that before. Select bar, select date. Oh, that's okay. Trading view. You see, trading view got a little update going on. That's what's up. We like that. All right, so boom. Here we are. All right, cool. We get there. Now, what do we do when we get there? So when we get to my POI, this is the daily time frame. It's a daily time frame. So for me, typically, if it's a daily point of interest, like this big old purple area, you would want to see a reaction on a time frame like maybe the 15-minute. You could say the 5, depending on how big the purple area is. So this purple area is not the biggest, because some daily POIs would be this big, right? They would be huge, but really this isn't that crazy of an area. But I'm watching it. The reason why I felt comfortable getting in based on the 1 minute, which is what I did, is because of the way that we staggered into it and then we dropped off. So to me, I'm already eyeing this as some type of a manipulation to fake people to be overly bearish right here. All right, so now I'm watching price. When I see this come out, and I showed this type of entry strategy in one of my videos on YouTube earlier, maybe a month or two ago, where I get in, if you know what you're looking for and you know how to do it, I get in on the creation of a fair value gap. And it takes a lot of experience in knowing what to look for at this time period. I mean, when you're doing an entry like that. But this is what I got in on. I got in on based on this. And for me, if we don't create that fair value gap, which is my trade idea, I'm out of the play. It's really that simple. So obviously my risk to reward is extremely favorable because I'm getting it down here. Oh, I forgot to say my target, by the way. So my target is the highest body on the 15-minute time frame. I'm keeping it very, very simple, y'all. Keeping it very simple. And also, I view this as a sweep. So as I'm like, okay, we sweeping these lows, tapped into a daily inefficiency. This is easy. This is really easy money. And so for those who don't get what I mean by highest body, what I do is I'm looking at this overall high, right? And I'm saying, what's the highest body? It's not this red one. It's not this green one. It's not this red. Is this? Nope. It was really this. This red body right here has the highest body in this overall swing point. So that's where I want to take profits at. That's a very conservative place to take profits at. So boom, that's my target. Now let's go back to the actual entry. All right, so cool. We get in here. Stop loss is if we fail to create an inefficiency. All right, so we created one. I liked it. Now there's a choice that you can make. You could either leave it here because once again, some fair value gaps you don't expect to get traded back to. I personally said, I'm going to give price room to trade back to this. So for me, I move my stop just slightly lower to right there. Now, that's not much of a difference for some of you, but to me, I know what I'm looking for. And so I just moved my stop right there, and I said price could trade into this if it wants to. But it didn't. So even better. Now that we all up here, at this point, I believe I went break even. I mean, I would see myself going break even. But it doesn't really matter. We in the play, we moving. Everything's holding how it needs to, and then eventually we get to the target. Cool. So then target hit. At that point, we exit positions. Successful play. Just taking it to the highest body. Because honestly, y'all, look what happened after that. So you would have lost mad gains. I don't even think it ends up coming back there, did it? Because at this point, I went over to NASDAQ after that, but okay. Yeah, see, it never actually took those wicks, I don't think, before coming back down hard. I could be wrong, though, but either way, yeah, it clearly ranged. So that was a good little exit right there. And so whatever, yup, it never actually took those wicks. That's why I be talking in that highest body, man. It's not always where I take profits at, but I'm saying in certain settings, I play it conservatively. It's a very conservative target for y'all. But then eventually we seen CL go really bullish out of this area again. This time we came to that halfway or the 50% of that fair value gap, and then CL really took off in the afternoon. Really took off. This is what I was looking for real. I wish they did this when I was in it. They only gave me that little baby play. They gonna do this after the fact, like, all right, but it's a daily POI, right? It's a daily point of interest. So as long as it plays out by the end of the day, it'll look like this when you look at the daily time frame. You don't even realize that it touched the purple area twice. You just see one wick. You don't even know that it touched the purple area twice. So it doesn't really matter, but that's where we are. Now CL expectations. I expect CL to remain green, especially coming off of this inefficiency. I would like us to remain green and tag into this area around $88. I expect CL to push into $88. That's a first destination, but ultimately I want CL to get to this overall area. I think I got this from the weekly or the monthly. That's the monthly. Yeah, so but I drew that wrong, but yeah. So we got I expect CL to come up into about 90.76. So either way, oil, I'm staying bullish on oil. Things look good on oil. So that's that. So that's that. This is DXY. And then let's go and take it back to oh no, I'm gonna talk about the Dow for a second. So same thing with the Dow, man. Same thing with the Dow. I'm telling y'all right now, bro. If the Dow was bullish, it would have used really right in here. Like I swear, pretty much right in here would have held. Anybody who came to my Order Blocks Masterclass knows why I say what I say. Don't say it in the chat though. Don't say it in the chat, but y'all know what I'm saying. If it was bullish, it would have helped. Price is whispering secrets to you by not going bullish off of it. Now it technically did actually. Let me be very clear. This order block was indeed used because we ran these highs. Let's be very clear. The point of an order block is to bring you back to the last high. Look how we ran those highs out. So it was a successful order block, but coming back down into it and losing the only spot we expect a reaction off of, yeah, then you see we end up running sell side. We ran liquidity down here, and being that the Dow has so much more built up liquidity, I do feel that we're gonna have an extended move. Plus, price is whispering secrets to you. So this bearish fair value gap, did it get used? Nope. Beautiful. We love that signature. Then you have this one right here that did get used. Oh, but it wicked above it, right? What we say about the wicks, we don't care about the wicks. Then we push down. And so I'm expecting continuation to the downside, but you have to still keep your eyes on if price wants to just sweep these lows like it's doing right now and pushing up. So no matter what, I need the indices, all three of them, I need all of them to stay heavy to the downside because they're at spots where they can just simply be sweeps to push back up. So we can't fall in love with downside because all three indices can literally sweep these lows like they're doing and find its way back to the other side. If price is truly bearish, there's no need to do this. There's no need to do that. If it's bearish, it will drop pretty much immediately. Okay. The weekly I think was telling me much lower too. Like when I look at the weekly on the Dow, it just looks really good to the downside to me. I would take it to this right here, about 38.013-ish. That's kind of why I would take the Dow. So this is YM on futures. I would take it to about down there. That coincides with IWM. No, my fault. That's a Russell. That coincides with freaking DIA on options. And speaking of freaking the Russell, I did want to speak on the Russell for a quick second. For people who do trade the Russell, this is the Russell on futures. And so therefore it's the exact same thing as IWM on options. So don't think, oh, I trade options, so he's not talking to me. I trade options too. Everything I do on options is based on a futures chart because it's the same thing. The Dow is the Dow, the Nasdaq is the Nasdaq, the SP 500, and the Russell is the Russell. It don't matter if you do it with futures. It don't matter if you do it options. You can do it with CFDs. Guess what? It's the same candles doing the same things. You just get more data from a futures chart. You get a lot more data. All right. So we've been calling the Russell up and down very successfully. We talked about price using the upper half, like very specific too. The upper half of this BISI to take us to the highs. It did exactly that, delivered. Now it's coming down. Looks like we just swept it. And pay attention to what price is telling you. We now using this inefficiency. Also, there's a small one up here, not really that significant, but we didn't trade back to that. We used the one below. Cool, we like that. And so we're expecting some more downside here. Yeah, I would expect some more downside here because there was a potential that price could have bounced right where it bounced at. But seeing that the bounce didn't hold, and instead it actually respected the bearish tool that we have, which is this bearish fair value gap, instead of an order block, that tells me that we're predominantly bearish. So it's kind of like a war. Who's gonna win? You got a bullish signal and you got a bearish signal. Who's gonna come out on top? And right now, the bullish signal had a little chance. It gave us a little push, but then it tagged into a bearish signal that's taking us back to the downside. So, but same thing, right? We need to see this daily candle kind of go bearish really soon. I don't want price to be too I don't want us pushing up too hard, because then you could say this. You could simply say, oh, look, this is another sweep. Look, let me just sweat these lows to push up. So gotta be heavy in the early parts of tonight, London, whatever you call it, but gotta be heavy. All right, so yeah, I feel like there's one thing I wanted to say. I think it had to do with the NAS. I just wanted, oh yeah, this is the last thing I wanted to show before I kind of go to the chat and see what y'all talking about in there. So I know we obviously see the type of dump that occurred in there. Oh yeah, I'll tell y'all what I did catch. That's the thing I forgot to say. I did catch this. So intraday, people, what gems can we take from Nasdaq's price action today? Let's really lock in right quick, because I gotta actually run a class with my mentees at 8:30, so I'm not gonna be on here much longer. But what gems can we take from this? So price is dropping off. It's staggered. It's ugly. It's not even believable. It's not believable. Cool. Cool. So we're looking for signs that price wants to push back to the upside. Plus, as I told y'all, entering today, I actually expected this to push a little bit higher than what we did. A little bit higher. So I already have somewhat of a bullish bias because at the time, y'all, you know, price really was just right. Price looked like this. It's like we can't look at things in hindsight. We gotta go where we at. I felt if we were bearish for real, we would have rejected really like how we rejected before, but then we started pushing up. I'm like, okay, cool. So we're probably gonna run over these highs next. No, price they ain't go that high. So that's a target that I had wrong so far. I mean, obviously, like I said, price could sweep and push up there, but that's why everything, like I said, is low probability in a range. Because I ain't gonna front for trending price action. Whenever price is trending, right? Let's look at DXY. You see how price is trending on DXY? Yeah, when things are actually trending, it's good to have confidence, but I'm really just speaking on facts. If you really look at it, people that's been with me for a while know I don't really get things wrong too often. Price is trending. I know exactly what we were traced for. I know exactly what we targeting. Everything is good. Everything moves smoothly. Same thing with CL. I didn't call CL up and down, and both like this has been accurately called on everything. And I'm not saying that to like boost myself up more than I'm saying that to let you know that in trend, if you know what you are doing, price is extremely predictable. Price do the same thing over and over on all time frames. That's why I can go down to the 15-second, or I'll be scalping on the 5-second time frame, because it's the same thing on every time frame. So when we're inside of a range like this, everything is lower probability. So if we were in trending conditions, I really strongly believe that we would have ran above these highs. But because we're inside of this range, things that you would expect to deliver don't fully deliver. And that's why I say, please lower your leverage. Please be careful trading on the inside of a range. Your most highly probable trades will always come on the outside. I cannot stress that enough. So now here we are expecting higher prices. And so I can only go with what I have. I can only go with what I have. So there's nothing to get involved with on this drop off. Nothing was looking good and everything. But I could say, where was that? Is this? Nope, we're not there yet. Nope. Nothing highly. I don't like anything going on. Then this drop off starts to happen, right? This drop off starts to happen. Cool. Now, I believe this is when I got involved off my memory. That's when I got involved because for me, right? And for you, I'm talking to y'all when I say this. I want you to think about if we're bearish, what should be happening? And if that's not happening, guess what? What do you think you are? Bullish. You're probably bullish. And guess what? If you take that bullish entry, you're gonna say to yourself, yo, if we're bullish, what should be happening? And if that don't happen either, then what are you in? Chop. You're in chop. That means valid bullish and valid bearish things are not working out. You're in chop and you need to stay on the sidelines. So it's kind of similar to in this range. I could point to valid bullish and bearish things that didn't hold inside of this range. This is chop. So when I noticed this on NASDAQ, guess what I did? I drew a line above these highs. I drew a line below these lows. And I said, I'm going to wait for the trade outside of the range. This is what I be talking about. The best trades come outside of the range, my people, outside of the range. So notice we draw the range. This is a no-go zone. I'm not worried about this. Everything in here is low probability. I don't care what you're trying to trade. I don't care what style you trade. You trade it on the inside of a range. It's all low probability. So do I take a breakout? No, I'm not a breakout trader. I don't take breakouts. Now, why do I expect price to go up? The higher time frame told me where we're supposed to go already. So I did not expect this type of delivery. Remember I talked to y'all about consolidation, how it could come out. It could use like this inefficiency, for example, to go back lower. When would I expect this type of delivery? If we were bearish from a higher time frame, meaning the higher time frame told me we want to come to these lows or something like that, right? Maybe the higher time frame told me to go. No, because I expect bullishness, I'm not looking for that type of entry. So for me, I'm waiting like a hawk to see if we invalidate this inefficiency. That's what we did. We invalidated this inefficiency. Bet. Guess what I did? I got involved. With lower leverage. I already made good money on CL at this point. This is my second play here. So now I'm involved. And at this point, what I want to see if I'm bullish. Well, I want to see us create an inefficiency right now. All right, we created it. Beautiful. Now, this type of inefficiency and the way that it's formed, I expect it to be revisited. So my stop loss is no longer here because I wouldn't be surprised if it gets revisited. For me, I just move my stop loss down to here because then for me, if it does revisit, which I expect, it needs to use it. Like, don't just revisit it and come down. Obviously, I need you to use it. So if you come down this far below, I would expect you to be trading through it, and I would expect bearishness. But then that would tell me something else. That would tell me that, okay, what I expected if I was a bear, we should have rejected here. So why didn't we? And if I'm bullish, we should bounce here, right? So why didn't we? So if this did happen where we did not use this inefficiency, I actually would have stayed cash because I would have said, yo, we in chop. We definitely in chop. If this green area don't work, that means this highly probable bearish area didn't work and this highly probable bullish area didn't work. We in chop. So I would take my one loss and I would go about my day. Or I would just wait till we really break the range again and look for something else. But trying to force stuff when price is screaming at you that we're in a range is how people blow accounts. So right now my play is, we better use this green area to push higher. Copy. And so, this is actually, yes, I mixed up my play, my fault. That's not even when I got involved. I mixed it up. Hold up. That's not even where I got involved. But you see it though. Real talk. Look at it. I'm just glad that played out like this anyway, so we can see what I'm talking about. This is how you know we're in a range. Look what happened. We're in a range. We're in a range. So something highly probable on the bearish side, something highly probable on the bullish side didn't work. What did price do? Did it go past these lows? Nope. Did it go past these highs? Nope. So we stayed in a range. So it's good to like get out of that. But I obviously forgot where I entered that. It was something very similar, and it took us back to the upside. Oh, I remember now. Actually, it was. Look, let's do it again. Let's do it again. Redo right here. Redo right here because I definitely mixed up where I actually got in at. So we doing the same thing, y'all. Same thing. And I remember going to the hourly as well at this time and looking for what we're trading in for. And I'm like, okay, I want reactions right at this part of this inefficiency. Okay, so I got hourly confirmation that we're supposed to go higher and everything. And yeah, all questions in the chat, I got y'all. I'm almost done. And I got y'all on the question in the chat. My fault. I'm almost done. I'm gonna show y'all something real quick. Cool. So I'm waiting for us to leave the range to the downside because the thing is, I have a bullish bias, right? I have a bullish bias. So I don't believe in anything to the downside. Also, here's another gem that I want y'all to take from this. If I have a bullish bias, why would they leave all the people who are betting on price going up protected? So anybody who went long right here, guess where their stop loss is at? If you went long at this white line, you just went long at this white line, where's your stop loss? At the white line. So if price were to just go to the upside right now without ever touching this white line, that means you left these people protected. That's not typical. That's not how market makers move. And the thing is, let's really talk liquidity. What exists? Can somebody in the chat tell me, anybody who trade futures, what type of stop losses exist under these lows? What type of stop losses exist under these lows? Somebody who trade futures, anybody know? What type of stop losses exist under these futures? What type of stop losses exist under these lows? If you trade futures, anybody know what I'm talking about? Am I the only one that trades futures? Because it's not even about futures. Like it's not about futures, but futures helps you understand why price moves how it does. Nobody know? I guess not. I guess I'm talking to just straight options people in here. All right. So for those that don't know, which looks like everybody, what exists under lows is something called sell stops. So there are sell stops under these lows. So if market makers want to buy price, if they're buying, it means it's going up, right? So if they want price to go up, how do they fuel their move? Who are you selling the position to? You're selling it to people buying it, which are market makers. So you got to sell it to them so they could buy it low. And guess what they do? They sell it high. And when they sell it, what happens? When they sell it, they go down here. Okay? If they're selling, price will go down. But in order to even get fuel for the move that they really want, they're gonna make sure they trigger your sell stops. So now you have to sell something to them, because not to go in the futures, but this helps you understand why price moves how it does. So this is for everybody. Just know if you want price to go up in futures, that means you got into buys. You're buying something. It's not called calls. It's not calls is an options term, but forex as well as futures is buys. And when you set a stop loss, if you're in buys, your stop loss is literally called a sell stop. So who do you think? And by the way, my fault. When you get it triggered, right? Somebody triggers your stop loss. That means that you had to sell it back. So you bought something, you have to sell it back. But this time, unfortunately, you're selling it back lower. You're selling it back lower than what you initially bought it at. That's why it's a stop loss. And so who the heck are you selling it to? This is a market where for every buyer, there's a seller. For every seller, there's a buyer. So if market makers want to buy, they're going to make sure that they're getting your position. They're getting your actual order. So you're going to sell to them. They're buying it low so they can take a high. So what I'm saying here with this play is, if market makers want to take it high and I trade with the market makers, I can't beat them. So I decided to join them. That's what we do. I'm waiting for a price to actually take these orders, which they did. Cool. Now what? This is actually, I remember, this is really where I got involved. Now I remember. But it's the same logic, y'all. You're going to see why I got confused thinking it was this one. It's because I'm doing the same logic. Okay, now that we ran out sell side, just like this play, right? There was sell side, we ran it out. Okay, so now that we ran out sell side, I'm looking at what? That inefficiency. This inefficiency is important. This will tell me if we're bullish or bearish. Just like this inefficiency was initially important, the one I was talking about earlier that I mixed it up with. You see, same logic. Ran out sell side, I'm looking at this inefficiency. Ran out sell side, the white line. So I'm looking at this inefficiency. Bet. Are we gonna use it or not? I already could tell we're not gonna use it. Plus the higher time frame told me we're bullish. So I already anticipate price trading straight through that. I'm just literally looking for confirmation. Boom. This is where I get involved. This is where I get involved with the expectation of this being the AMD setup. Remember I told you about the AMD? So we accumulate it right here. We manipulate to one side and I'm expecting us to distribute. Copy. Beautiful, beautiful, beautiful. And so I'm just literally just trying to take this to where the buy is high, because my next goal is to get it all the way to the highs, which we did. Cool. And I have, in my phase 2 chat, I told them, yeah, I just sold my positions right here, but I'm still holding my swings. So remember, I was bullish. So my day trade position, I sold that. But on options, I had swing calls. So this is where I go and hit the road now. I hit the road, people. I hit the road. I caught this whole move. This is beautiful. Nice delivery. Cool. Locked it in. Caught mad points on this. I'm feeling good. But yo, it's great. It's a great bullish day in the market. We about to go on the road, man. Even though I know, once again, I know the high of the day is in already. That's literally why I sold my day trades up in here. I know the high of the day is in already. But I didn't think we was gonna come back to the lows. I thought price was gonna literally consolidate until NFP. That was my expectation. I thought this would happen, and I was gonna hold my swing calls and take it straight through NFP. I caught monthlies, but we already know the history. We already know what happened next. Voila, magic. So, did I lose money? No, because if I caught this entry down here and price goes all the way up here, where do you think my stop is at? Break even. So eventually my stop loss gets triggered while I'm on the road. I'm like, yo, what's going on, bro? Like, price dying right now. Like, and I'm just like, and I missed the whole move because I decided to drive when the market has the biggest drop it's had in I don't know how long. Probably one of the biggest drops I've ever witnessed. And like, so, there you go. And so this is really what I want to show y'all. That's my expectations going forward. Those are things I'm looking for. These are some of the day trades, logic behind the day trades. And for the next part of this, I'll do this off of the recording. So if you're watching this on YouTube right now, definitely subscribe to the channel. We're gonna do a lot more of these over time, and let's keep tapping in and check the links in the description. There's a lot of cool links for you to check out. Join my free community, and I'll holler at y'all.